We are looking at profit versus cash flows in business. Last time we looked at revenue and then also went step by step through how we can reach at how we understand that our businesses are making profits. But today I would want us to take it deeper. Even if we make profit, we understand even if it's profit. For example, if I've made sales of 10 million and the costs are 8 million, the profit should be 2 million. But then when I'm going to check on account at the end of the month, the 2 million is not there. So how is it that the 2 million is not there? That's when we bring in the concept of cash inflows and cash outflows. Cash inflows is real cash that comes into business, and cash outflows is real cash moving out of business. Now, the reason as to why we look at cash flows is for proper cash management. Because now this is real cash, we are no longer on counting even credit sales and cash sales. What you sold on credit, then you also bring it and call it revenue, and then determine that you're making a profit. But then before you know it, you find maybe 50% of your sales were on credit. So that's when we bring in the concept of cash inflows and cash outflows. And what are some of the things that could affect our cash in business? The business is profitable, but it's cash poor. Why then? For example, if you're selling most of your products or services on credit, you might make the profit in business, but the cash might actually be struggling. Uh, if you take long to demand your clients, to follow up on your clients for them to be able to pay on time, you might find that you will end up struggling still. That's on the side of credit sales. If you find that you are overstock, if you're overstocking, you're bringing in a lot of stock, and yet that stock is moving on a slow pace, you might find that that could also harm on your cash, because then you're packing your stock, but then there are other activities that need operations that need cash from that business. So that might also affect your cash. There are many things that really affect cash for it to reduce, yet the business seems busy and profitable. So what are some of the things that we could do to make sure that we have a stability of our cash in business? One of the things is to reduce unnecessary credit sales. If it's really not necessary, let's not give goods on credit, because some of the creditors also. And if you're going to give, then let there be some good history. Otherwise, we might end up struggling to have some money to run the business. Then also, let's not overuse debt. Because you see, debt, however much you count it as part of your money in business, you will need to pay back that principal with the interest. And the interest also reduces on our cash that should be in business. So while you're paying back the loan and its principal and the interest, then you're reducing on the money that should be in business. So let's always take loans that are necessary for our business growth, not loans that are going to be operational, because those might affect our cash in business. Then another thing that we can do to ensure that our cash is stable is not to overshop goods, mostly those that are slow moving items. If something is a slow moving item, or if I'm doing some production, but then I'm buying a lot of stock which I'm not going to use to do production of goods that I'll sell, then I should be able to manage it and ensure that I balance that stock that I'm keeping, so that it doesn't hold a lot of cash, and then it makes my business to be cash poor. And another way is to reduce on unnecessary spending. in business. If those expenses are really not necessary to help us operate our business, then we could try to reduce them. Those donations, because donations reduce our cash. It's good to donate, but then you balance the business versus what you're donating. In fact, in taxation, we say that we only allow 5%, 5% of what's the of chargeable income, of what tax is charged on. So if even the tax authorities allow only 5%, then why is your business donating 50% of your profit? Only if it is spirit-led for those who are godly. So let's analyze cash flow deeply, because it's really key for us to have money able to run our business on a daily. Otherwise, we shall end up going to money sharks and get an expensive loan for you to run the business, and before you know it, the business is struggling.